I didn't want you guys to have to find out like this, but as Wall Street's melted down all day, I've been popping pills all day. Flintstone vitamins, that is. That's so stupid. Holy smokers, guys, the market meltdown continues on. The Dow falling another 550 plus points here today. The NASDAQ down another 1.7%. This is one of the rare days where the Dow actually falls more than the NASDAQ. I have not seen that very often as of late. We've got a lot to get into here today. A lot to get into. Some interesting things I've seen out of Wall Street today. Like, I feel like Wall Street just woke up today. Like, they just woke up and like got to reality. We're going to talk about that. We're also going to talk about something that I think is really scary for a sector out there, or a group of stocks, let's put it that way, that has not fallen yet, that I think is, we'll talk about that, all right? So first off here, I want to talk about L Brands, okay? They just reported earnings yesterday, and this is a company I used to own, and then I sold out of the position completely several months ago. I covered this on the channel, and they fell massively on this earnings. Just as I knew they were going to have to do, they cut the dividend. They made a lot of moves like that. They're actually starting to make some good long-term decisions, in my opinion. They should have done this a while back, but they're starting to get a better long-term focus. But I knew this stock would fall massively. But what did I do about it? Absolutely nothing. I could have made a fortune on put options. I know this company like the back of my hand, and if I had to make a guess, it was like a 98% probability this stock was going to get killed on the earnings, because you knew the dividend cut was coming. Anybody that knows this company very well, you knew that dividend cut was coming. And if all these stocks that are reporting great earnings, right, that are beating analyst estimates, if those stocks are getting killed, like, what do you think is going to happen to a company like L Brands? It was such an easy put option play, and I sat on my hands and I didn't do a thing about it. And I could have made at least 100, 200, 300% today on those put options, but it is what it is. So first off here, let's talk about some interesting things I saw out there, okay? So first off, I read this on CNBC. There's a good headline here about Jim Cramer. He says, "You'll be wishing you sold at these prices if the Fed hikes in December." Basically saying if the Federal Reserve decides to hike rates again in December, like, we're all screwed, and we're going to be wishing we sold out of our stocks right now, because, you know, the pain is going to be massive. You know, I'm not going to really argue with that, because, you know, who knows, maybe that could be true, maybe it's not true. Maybe the Fed decides to not raise and the market still goes down. Like, you never know. So I don't have necessarily issue with that. I think that's just speculation out there. The thing I have an issue with are these next few slides I'm going to show you guys, okay? The next part is really troubling to me. He says, nearly every sector is in capitulation phase, with the exception of healthcare. That's not the only sector. There's a lot of bad. I mean, I'm not going to hide it. There's a lot of bad. It's a bear market. Jim Cramer, sir, in all due respect, like, we've been in a bear market for a while, in my personal opinion. Like, if I look at the past 6 months, I've seen nothing but stocks get absolutely destroyed. Whether it's stocks I own, whether it's stocks other people's own. Like, in my portfolio, I can think of like 2 stocks that have done really well. Eli stock and Tesla stock, and that's about it that I bought in 2018. The rest of them are down at least a few percent. Some of them are down 10+%, okay? And that's pretty much across the board for almost everybody out there who's bought any shares in 2018. And I'm looking at it and I'm like, this is like, why are people just acting like all of a sudden today it's a bear market and all of a sudden the market's got negative? I've looked at nothing but stocks that are at 52-week lows, stocks that are down 30, 40, 50% over the past 3, 6, 9 months. I've seen nothing but disaster out there. Morgan Stanley, they come out yesterday. We are in a bear market, they're saying. They said Morgan Stanley thinks the bull market is already over. By the way, Morgan Stanley, where have you been? The bull market has been over for 6+ months now, okay? This has been over for a while. It's like, why are people acting like this is new information? Investors just don't realize it. Like, Morgan Stanley, where have you been, Morgan Stanley? Like literally, all you had to look at, we've talked about this on the channel many times. I posted a video in the past about how I thought we were in a bear market, and I said how so many stocks were at 52-week lows. I pointed that out time and time again. If you just look at, if you looked at anything other than the FANG stocks, you saw disaster out there, right? But the FANG stocks were kind of holding everything together. We're talking about specifically Apple, Amazon, Google, and even like, you know, Netflix to a certain extent, and even Microsoft, right? Some of those stocks have such heavy weights on the market that those stocks doing good that helps hold the whole market up, right? And it makes everything look, you know, better than it really is, right? When all these other stocks were getting absolutely destroyed. And then all of a sudden, over the, you know, past few weeks, those stocks have gotten destroyed. The 5 most important tech stocks are getting slaughtered, with each down more than 20% from its highs. If we look here, FANG stocks that have fallen from 52-week highs, Facebook is down around 40% from its high it hit in the last 52 weeks. Amazon's down 25+%. Apple's down 20+%. And by the way, this doesn't even take into the losses today, okay? So all these are even worse than what this chart shows. Netflix down 35+%. Alphabet, which is Google McDougal, down well over 20%, all right? So all these stocks are finally falling, I think has finally woken up Wall Street to like the thing I've been talking about for a while, that so many stocks, it's hard for me to find anybody that is doing great in stocks right now, or at least that have bought stocks in 2018. It is very hard to find. Like literally, I can only think of 2 stocks I own that have really done good in 2018. And if I'm looking at friends, if I'm looking at people that I know that are investors in my private membership groups or whatever, almost everybody has had their stocks go down. So I think Wall Street just finally waking up. It's like, Wall Street, where have you been? Like stocks have not been good for months and months and months. Now, there's been a particular industry of stocks, a group of stocks, let's put it that way, that has done very, very well. I'm talking about stocks like McDonald's, stocks like Pepsi, stocks like Coca-Cola, Procter & Gamble. We're talking about Johnson & Johnson. What do these stocks have in common? These stocks are seen as the safety stocks, all right? These are seen as the safety stocks, like the recession-proof stocks or something like that. Some people want to, put names on that. The stocks that can't go down or would do very well even in a recession or something, all right? We're going to talk about that in just a minute. What else do these stocks have in common? Well, all these stocks are either at their 52-week high or very, very close. McDonald's, literally within a couple dollars of its 52-week high. Pepsi literally hit its 52-week high today, okay? Coca-Cola hit its 52-week high today. Procter & Gamble is so close to its 52-week high. Johnson & Johnson hit its 52-week high today. These stocks, in my opinion, are going to be the next leg down, okay? They're the last kind of thing that's holding up the indexes to make the indexes look like it hasn't gotten that bad as of right now, okay? The fact that so many of these stocks have had money flood into them. Eventually, money's going to flood out of those stocks because so many of those stocks are trading at PEs in the 20s plus right now. And a lot of those companies have anemic growth, like super slow growth, or their businesses literally can possibly decline over the next 3 to 5 years, even if the economy's decent or something like that, right? Now, a lot of people think that these stocks don't go down in a recession situation. And I'm like, let's figure this out. Is that really true, okay? Let's go back and look at the last recession. So this period is coming up at the end of 2007 all the way through 2009, okay? Look at Johnson & Johnson stock. This was a $70+ stock. In a matter of a few months, this goes to under a $50 stock. Does this look like a recession-proof stock or a stock that you can't get hurt in? Absolutely not. Procter & Gamble was well over $70, and within a few months span, this is around a $45 stock in a very, very short amount of time. Coca-Cola was well over $30+ a share, right around $31+ a share. And next thing you know, in a matter of 6-9 months later, we're talking about a stock that's in the low 20s during the recession. Pepsi goes from $70+ to within a week's time, basically, under $50 a share. So I think the whole notion is very mistaken out there, that people feel like those type of stocks are really good values or the place you want to be in a recession, when really, if you really feel strongly, you really feel like it's the world's ending and we're going to have a huge recession in 2019, if you really feel like that, the best place to be is really on the sideline, right? If that's how you feel and that's your judgment, the best place to honestly be is on the sideline, or be, shorting some stocks if you really feel comfortable with that, or maybe buying some put options if you're really that negative and whatnot. That's the best place to be. In those stocks, it's not like those are safe stocks and you're not going to get hurt, because like the proof is in the pudding. Look at the last recession, look at where those stocks were coming into the recession, and look where those stocks dropped in the recession, all right? Now, stocks in general are priced right now almost like we have to have a recession in 2019. When I look at countless stocks out there, I'm looking at tons of stocks that basically, if we don't have a recession in 2019, they're going to have to bounce back so strong, because we're looking at companies that earnings are going up 20-30+% and are trading at PEs in the 15 to 20 range right now. Like, that is ridiculous, okay? These valuations make no sense unless we have a big recession in 2019, a global recession, a global massive sell-off of equities, a massive contraction in spending. If we have all that in 2019, then you could look at valuation and say, okay, this kind of makes sense that stocks are trading around here. But if we don't have that type of situation, we're in a situation where these stocks are going to have to bounce back in a big way, just for the mere fact that the valuations literally don't make sense. If global growth is still strong next year. Throughout the year, the beginning of the year, the end of the year in 2019, like it literally doesn't make sense for so many of these stocks to be trading at the values they're trading at right now, because some of these stocks have just seen ridiculous declines and are trading at, forward P's that are massively lower than any market I've seen, at least in my time since I've been in the stock market in the last 10 years, okay? So I think it's going to be very interesting out there. I think we're priced like we're going to have a recession. If we don't have a recession, then I think things are going to have to, bounce back in a very strong way. The Federal Reserve is going to be very interesting to see what type of move they make, if they're going to continue to raise rates in December. If not, it could also be looked at as a negative, if the Federal Reserve doesn't raise rates in December, you could also look at it as, the Federal Reserve is really scared about the economy. Also, now they're not going to raise rates. They must be really scared now. Something bad's going to happen. So the Fed's almost in a negative situation 2 times, right? If they raise rates, everybody's going to say, oh my gosh, rates are going up even more. No one's going to be lending money. No one's going to be taking out loans. Everybody's payments are going to be more, and credit cards, blah, blah, blah. And so that's a negative. And then if they don't raise rates and they're like, oh no, we're not going to raise rates, then everybody's going to say, oh my gosh, there must be something wrong with the global economy. We're all screwed. There must be a recession coming. They're not raising rates. So the Fed's in a bad situation either way. Either way you can look at it right now, and you say the Fed is screwed either way by Wall Street right now. So it'll be interesting to see what happens. But as far as that grouping of stocks is the recession-proof stocks, the safety stocks, I think that's probably the next leg down in this market, because I think investors are eventually going to wake up and be like, wait a minute, a lot of these stocks are hardly growing and might be shrinking over the next 5-10 years, and we're paying 20-something PEs for a lot of these companies that, it's just not factual that those stocks don't go down in a recession. They go down a lot in a recession. So anyways, hope you guys enjoyed this. Let me know what your opinion is down there in that comment section. If you'd love to keep up with stock market news, make sure you follow me on Instagram. I'm always posting a lot of stock market news in my Instagram stories. Thank you for watching, and have a great day.